connected. We are set. We're ready to go. Feel free to type in questions and we can review stocks and markets together. So we can be looking at stock markets, option transactions, futures plays, and we'll go through this process together and learn and educate together. So I hope you guys are having a phenomenal morning. Markets have gapped up in the early hours of the, well, early minutes of the market here, first half hour of the market. Looks like we're possibly going to get a 10 o'clock reversal. Let's jump over and take a look at the major indexes to start our day together. So we are going to be looking at show windows. Okay, here we go. All right, S&P futures. S&P futures, we are looking at a 50-minute time frame right now, so we are in a very small time frame. As you know, what I like to do is start with the larger time frames, work our way down. So let's just jump back. We'll work through this together. Let's come out to the daily time frame. Look at our location. Are we high in price, low in price, supply demand levels, moving averages, etc. So yesterday we were looking at this as a demand level. Right? We're looking for strength to get into and initiate transactions. So we got exactly that. Right? We got that strength and we were able to initiate some transactions. I looked at a couple of stocks with you guys yesterday. We'll come back, we'll look at those in just a minute. But you can see here, we get the long tail on the daily candle there, long tail on the daily candle coming off that demand level. So that's indication of buying right there. So we're gonna look for follow through today. Look for follow through. I'm not expecting to get above today's high. That would be phenomenal, but I'm not expecting that. Just looking for some strength and follow through on this. So right now in the market, it is a critical time. So we just come up to 10 o'clock. And let me walk you in deeper. So let's come back to that 15-minute time frame here. So on the 15-minute, this is your stage 3 trend down into stage 4, which is your downtrend in the 1, and then we're looking for that stage 2 to start. So we got the double bottom, we got the higher low coming into play here. Hey, to get a complete double bottom, we've got to get above this pivot high. And we achieved that and did that exactly that there yesterday. So not only did we get above the double bottom and complete the W formation for winter, we also broke above this resistance, which was a supply area as well. Right? And this is the supply that we looked at yesterday morning that created the initial breakdown there coming off the Sunday night. Right? So we got above that. So a lot of strength in this market at this point. So now what we're looking at here is right in here is a little demand level. And this is coming from, this here is coming from the overnight, well, the overnight session, so early hours of the morning, coming just after the London Open. And we can see this is a proven demand level here. And this is what we just came down to at the 10 o'clock, so the reversal area. So you got moving averages, 50-period moving average coming through here at the demand level there. And now we're starting to get strength come through. So we need to get above this high, right, as we come into this area of consolidation and a little supply area here. So looking good at this point, coming right on through. We are seeing big tech kind of leading this charge at this point, which is great. And that's going to give us the strength for us to be able to get through and continue on what's now on a 15-minute time frame and uptrend. Let's just come back to the 60. On the 60-minute, we are looking for higher lows and higher highs. So there's your pivot high, pivot low. We now have a higher pivot high. We've just created that pivot low. We have a complete pivot right here, and we've broken above to a new high than this one here. So this is another major pivot as we've gone up sideways. And now what we're looking for is the breakout. Now, right here is supply. Not only is that supply, this is previous support, which became support, right, which was then proven as resistance. Then we got the breakdown. So as we come into this area here, this is going to be a little bit of a challenge for the market to get through. So you're right around the 32.98 mark there. It's going to be a challenge for the market to get through and break through that area. So what we're looking at now is expectations. What do we expect the market to do? And expectations are really, really important based on the psychology of an investor. So what we expect the market to do is come up into this area, retrace back down to this base here to then be able to continue higher. And the next price area here would be looking at would be this supply level here, which is a proven supply right here, which created that larger drop in the market right there. Right, so up into the supply, look for the retracement. This would be a great area to get involved in the markets. If you're not already, you've been waiting for strength to come to the markets, and wait for your retracement, and then we can trade up into this supply area here. And then we're in a very established uptrend, right, looking to get back into this region here in the next few days over time. Right, so as you guys are well aware, we're going to have a lot of news kind of hitting the markets, going back and forth. There's going to be a lot of volatility, which is phenomenal. And we touched on this yesterday. Be aggressive on taking profits. Be aggressive on managing those transactions and getting portions of the trade off, moving your stop losses up to protect those profits. This market could run. This market could collapse. It could go up, down, up, down, up, down, up, down very, very quickly as news hits the market, and they kind of look at what's going to happen with the election. There's a lot of uncertainty around the election, as there always is, and news events hitting and so forth. So be a little more aggressive on profit taking, and that's just the nature of the beast. Now, what we should have is quite a bit of movement, and movement is money, so that's a good thing. So that's the S&P. Let's take a look at Russell. Russell did exactly what we kind of expected it to do there yesterday. We came deep down into this demand level here. Again, let's connect to a larger time frame. So on the Russell, we had that daily demand area, which is looking real good. Right? So we've been here for quite some time, all the way down to the bottom. We came down to the lower region here, which is good, right? And we closed above, right? Closed back above these highs and so forth. So that's good. That's looking promising. So the Russell right now, let's get rid of those real quick. Russell right now is looking not too bad on the daily time frame. Not a lot of strength here just yet coming through. Let's break this down. 60-minute time frame. Let's see, we got the strength in the market. So you can see the Russell coming into this area here. You can see the big long wicks on here. That's selling pressure. We just broke down. We did get a tick lower than the previous low. Not a big deal. But we really need to see some strength in the Russell and see money being committed to the broader aspect of the market. And that will really help this market drive higher. So Russell's basically in a consolidation. Russell really needs to break above this price area here of 1490 to really have any strength behind it. So be careful committing to the smaller cap companies at this point in time until the market gives us permission that the buyer is willing to participate and are committed to this market. So not so much there, not so much strength in the Russell. S&P's doing a lot better, and big tech is driving the S&P more than anything. Let's come over to the Nasdaq, which is big tech. Now on the Nasdaq, so 30-minute time frame. Let's come out. Let's look at the daily. Let's get a picture. Let's get a location. Where are we? What's going on? What are we going to run into? So right through here, resistance, support, and we are right in that price area right now. So this is an area that we got to break through this area. We can start to see a run on the Nasdaq and big tech to the upside. So not a bad place to be. Currently, we are in a downtrend on the daily time frame. So you've got to remember that your down move is the impulse move. The up move is a corrected move. So the impulse move is a larger, longer move, and the corrected move is a shorter term move. So we've got to kind of keep that in mind. If we look at trend line here, and the trend line could be significant. But let's take a look at what we're looking at here. So coming off the closing price, all the way through down to the closing price in this region here, we're going to be looking at right in that area. So the closing of today is going to be very, very, very important. Closing of today is important. What's the location? Where do we close? What happens there? Let's break this down. 60-minute time frame. Let's see what we got. Right on the 60. Looking good so far. Okay, on the 60-minute time frame, this is your demand level in the 60. We can see 13, 20, and 50 period moving average on the 60-minute time frame. That 13 and 50 were used pretty heavily and extensively, as was the 50 back here. So that 50 period moving average is very, very relevant on the Nasdaq futures here. So right down, nice reversal, creates a new little demand level right in here. That's looking good. Right up, now base. So you can see this morning we've dropped. We didn't quite get down to this area of demand. If we had to join the buy line of the demand zone right at the top of this candle, we would have just tagged it. And that's a very acceptable way to draw demand zones. So we could classify that as touching the demand right here and pushing up. And that's your 10 o'clock reversal. It's around 80% of the time at 10 a.m. in the morning, the markets change directions or reverse. So when you're looking at markets like this dropping into demand levels with other factors of probability coming in that we can stack the probability to work in our favor, these are great transactions. And you could also look at all the big tech stocks, or most of the big tech stocks this morning, and taking the trade based on the Nasdaq futures and those tech stocks filling their gaps, and then the 10 o'clock reversal time. And you'd have some very, very nice profits at this point by utilizing that strategy right there. So Nasdaq at this point, you can see wick, 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 wick. Now, what do those wicks tell us? Those wicks are selling. So we know right now in this overlap of tail to wick, which is a little supply area, right? There are absolute institution sellers sitting here. And we've been here many, many times now. So there's going to be less institutional sell orders still available. That gives us the indication of if we can get some strength here, we can break through this area. Now there's supply right here. That's not a very strong supply area. Again, we've been there many times. There's unfilled sell orders there are not going to be very relevant. There's not going to be a lot left. Okay, so if we can get some strength here, get some momentum, it won't be hard to break above this area. But then we also got to get this area, and then you get the 200 period moving average coming through here. On the 200, not a great deal. It is used as support resistance back here in history. So that's going to be some resistance as you come into this area here, if we can even get up there. So we've got to see the follow through here. We've got to see the follow through. So we got the gap fill in the big techs. We've got to see the follow through of momentum forcing to the upside. Now, if that doesn't happen, we know right here, this selling pressure. Okay, we break below this demand level, then we're going to be coming back into these demand levels here below us. Right. So again, this is where you've got to be kind of on the buttons at this point, looking at where your stocks are, what the positions are, and be a little bit more aggressive in taking profits. We're not really at the point in time in the markets where we can let winners run based on what the market's giving us. Again, you got to remember, if you look at the daily time frame on the Nasdaq here, daily time frame in the Nasdaq, we are in a downtrend. Okay, we have lower pivot highs, we have lower pivot lows, which means this has a greater probability to be a corrective move than what it does to be an impulse longer move. Right, so if we're going along this market, like I did yesterday, right, we've got to be kind of on those buttons, looking for areas where we can to lock in profits, and kind of be, like I said, more aggressive on profit taking due to this. Now, this can break, this can become an impulse move, right? That's a possibility, but not at this point, not a probability. And there's a big difference between possibility and probability. Okay, so how to be successful as a trader? You stack the probability, stack the odds in your favor, right, and act according to what the charts are telling you to do. At this point, the chart's telling us this is a corrective move, not an impulse move. So be very aggressive on taking profits on longs. Right? If we don't see the strength in this, right, we're going to see another leg down here, and that should get us down into the 10,300 areas here. Okay, so that'd be a good thing. That'd be a great thing. Right? That'd get Apple down to my $96 price point that I wanted to. So then we can take a nice, beautiful transaction with a weekly demand level on Apple. That'd be awesome. All right, so VIX did pretty much everything we said it was going to do there yesterday. Coming up into the area of supply here, right? Coming into that area of supply at the same time the market was coming into demand. Right, we're stacking the probabilities in our favor. That gives the option to start to leg into those long positions and accumulate on strength. So VIX did everything we expected to do it on the supply, working and coinciding with the markets. So these are all the indications of what institutions are doing with their money. And this is the way you go with the market. For many years, I used to have up on the wall above my monitors, what is the institution doing? If you can answer that question, you'll have success in the markets. If you can't answer that question, you're clueless to what the institutions are doing, the institutions will just take your money. They'll just take your money. So this is where education is so important. You got to think financial markets are the largest playing field in the world. It's the largest playing field. So it's kind of it's like the greatest coliseum where you got all these participants from individuals like you and me, retail investors, average person on the street, to extremely advanced technology bases from institutions and algorithms, et cetera, to very highly skilled traders coming to the markets, that we're all coming here to do the same thing. We're all coming here to take money from the market. Now, the thing you got to think about is, who's going to come out on top? There's someone that's clueless with a small account that has no education, that just thinks, buy and hold and going to be great, or a highly skilled and educated institutional trader, or You just kind of think of Goldman Sachs. Goldman Sachs, there's thousands of employees at Goldman Sachs, and Goldman Sachs, goes around the world to the colleges, and they employ the best of the best, the most brilliant minds in every division, every sector of every global market in the world. And that is either your ally or your competition. You're either working with them or working against them. Working with them, you can use their money to make you money. Working against them, they're happy to take your money. Right? So if you're not educated in the markets, just be ready to write a big fat check to Goldman Sachs. And many, many millions of people have done it before you, and many millions will do it after you. So this is your opportunity to be educated in the markets. Now, if you want to come in and do these live trading sessions with the Trader Boys and come in that trade room, you get the availability to do that. Go to traderboys.com, go to plans and pricing. It's going to be $69 a month, and you can have live trading opportunities all day long. Right now, we're just going to be looking at stocks and options. We're going to be opening up to futures and forex in the very, very near future. So we're bringing on other instructors to take care of that aspect for you. But $69 a month, I mean, you can make that back in your first trade. It's next to nothing. If you want to do it for the year, $690 for the year. I mean, $700. It's going to be the best $700 you've ever spent. Okay, so that's your VIX. Coming here, oil. Oil did what we wanted it to do yesterday. Right? Came down to the ultimate area, the $39 mark right there. We were looking at oil coming in, dropping yesterday. It was coming down to the 39.20 area here. We said we could take a position there. Now, this is what we talked about yesterday. Demand level, demand level, demand level. You got 3 layers of demand. So the probability of getting below this here yesterday was extremely low. Right? Now, jumping into that $39 price area, absolutely beautiful. You can see here we came up. We slammed target 1 right there. Right? And not only did it hit target 1, it reversed off target 1. So these targets are there for a very educated and skilled reason. So this is what we're talking about, taking profits in the trade. Let's call it 39.20, worst entry, 39.20, out of the taking profit of $40.13. Right. So that's a nice little move there for on the oil contract, the full contract of oil. Every tick is $10. Right. So that's a $900 profit right there on one contract of oil. So very nice transaction. Oil is maintaining and holding its demand level. So it's created a new little demand here. That's a proven demand. It's coming in and tagged that this morning. And you can take another nice little trade here, taking some profits. Right now, looking for the more extensive move in the upward direction, and to be coming under this pivot low for your next target of 40.50. Right, so oil is uptrend. Okay, stage 2, 3, 4. We're in 1, looking for stage 2 to start, and we maybe get that progression to the upside. The other way we can look at this is flagpole, and let's drill this in. We can be looking at a bear flag. Okay, so this is a technical analysis formation, chart formation here. So joining the 2 pivot highs, okay, coming through and joining the pivot lows right through here. And what you're actually looking for is, this is your flagpole, aggressive move to the downside, slow tight range trend to the upside, break below that lower trend line. That's where you go short. Right? That's where we go short. Now, there's definitely going to be demand here, so you got to take profit. Right? Some profit here, but then what we can look for is all the way down to this region here where this aggressive trend started, for your final target and reversal of that move. Okay, so that's an area right there, and then it'd be 37.60 area for target. Now you just want to come just above that. Right? 37.80 would be phenomenal there for target 2. So if we break out of that flag to the downside, go short, okay, take some profit at $39, and then all the way down here, 37.80, right, is your final target on that. So that's a nice opportunity there. Let's take a look at gold. Gold had the breakdown, came all the way down to the lower demand level. We've had this demand level out here for a couple of weeks now. This is where the accumulation area was. Okay, that was a support area. Now, gold and oil are still a form of open outcry market. What that means is there's still traders on the floor yelling and screaming at each other. So those traders have been around for a long time. They're support resistance traders. So you've got to look at support resistance on the gold and oil futures contracts. Right? Understanding the environment and what you're working with is critical to the probability of you being successful in any market. So this area here, that break was an area we can go short. Little transaction came down to demand. Okay, it did exactly what we expected to do. Now we're looking for it to come back up. So what was once support here is proving to be resistance in this area here. So gold's doing exactly what we want it to do. Now, transaction of gold, we can look for a break above this, and you'd be taking and looking at breakout trade. Now, what would be ideal is coming up some tight range base candles and then look for the breakout. That would be ideal. Are we going to get it? You know as much as I do. Okay, so Look for the breakout here. Now, if you're already in this trade, breaking above here, you can add to the position. Right here, drop base drop. There is supply here. Okay, there is supply. So again, look to take profits. What's going to control gold is the US dollar. US dollar has had a pretty aggressive move up finally, and that's what dropped gold here. So we'll got to keep an eye on the US dollar to kind of have a gauge of what's going on with the gold. So that's where you're looking at your correlated and inversely correlated markets to stack the odds and probabilities in your market. Now, if you don't know what I'm talking about, correlated and inversely correlated markets, get educated. Come see us. It's not going to cost you a lot. World-class education, very, very inexpensive price. So that's your major markets. If you guys got any markets you want me to look at, type them in the chat. Let me know what you're looking at. Let me know what's going on, and we can take a look for you and see what's happening there. All right, so let's go through and let's go in. Let's look at some of the majors. Yesterday we looked at Microsoft. We looked at Microsoft yesterday. Let me flip over to those charts. On Microsoft, okay. All right, Microsoft, let's come out. Let's do 30-minute time frame. 30-minute time frame on Microsoft. So Microsoft had come down into a demand area, what we're looking for is gap down. We traded up, right? Looking for the break above here. So we were looking at the 198 area yesterday. Okay, we're looking at this base here, looking to break above that high of that base, right? So we had this high, and then we had these two candles here. So we just dropped back this to the 15, and so we can kind of identify what we're looking at yesterday. Up into here, right? Base dropped down in here. We held the low, right? We held the low, and then I said if we break above this, if you want to be aggressive, breaking above here, take your entry. Right? Take your entry. You could also wait to break above here, which we did. Take your entry. If you wanted to be a little bit more conservative and have greater confirmation, wait for the retracement that we can get your entry closer to your stop loss, then take your trade, right? So here we got the break above this candle's high by a couple ticks, right? We got the retracement, right, into the area of demand right here, and then we had the move up, right? Now, the next way we can take this trade is break out of demand, right? Look for strength, and we broke right above this pivot high off the gap, right? So that's definite strength. These sellers are taken out, then wait for your retracement and take your trade. So there's three different ways. So you can see, based on what you're identifying in the market, what the strength of the market is, right, and what your trading rules are of how you can enter into this market. Right? So either one of these three is good depending on your trading plan. Right? So here we were in a downtrend, but we did hold the low. That means the buyers are stepping in. Right? We did break above these highs, okay, which was the little supply area, and we also break above this area, which means the buyers are now committed. Retracement, take your trade, up we go. Now this morning, gap up. We filled the gap over here. We took out this supply here, right? So buyers are stronger than sellers, right? We had the gap fill. So if you hadn't been in this trade yet, you can come down to a small time frame here, look for the gap fill, watch the Nasdaq futures. Nasdaq futures go into demand level, start seeing strength, which is just a green candle on a small time frame. Wait for the candle close, moves above the high of that green candle, boom, take your trade. Right? So right now we're hitting this 200 period moving average, which is a very relevant moving average on the 15-minute time frame for Microsoft, and we are starting to reverse off that. So being in the trading in here, you could look to take some profit here if you choose to. Right? And there's absolutely nothing wrong with doing that. Okay, this is where the buyers committed this morning. You could even move your stop loss up under this low. It's an aggressive stop, right? But this is where the buyers committed to this market. So that way, if this market drops, you're not going to give back the profit you've already earned, right? So stock can come up under here. You can take some profit right now, right? And then you let the market decide on what's going to happen next. If the buyers are going to stay committed in this market and stay strong, you're going to see Microsoft continue to move to the upside. What was once support over here is going to be resistance, and you need to take some profit over here. So you're going to be looking at, let's call it 206. right? 206 would be your next target on the upside, right? And market stays strength and committed here. That shouldn't be difficult to get to, right? So market's basically stagnating. We had a nice move up on Google and Amazon, and now we're starting to see a little bit of red. Not a big deal, not a big deal. But now you've protected your profits, you get some money in the bank, and you're being paid for your risk and action you took. So that's Microsoft. Let's take a look at PFSI. Now, these are longer term plays on PFSI. Right? PFSI is in an area of institution accumulation, which all that is, and for this example, is just a base. Okay, so this here is your little demand level, and every time we come down in here, there are buyers present in this price area, right? And it did it again this morning. So this 56 area right here is a accumulation area of the institutions, right? So what we're looking for is, continued once the institutions really commit to buying this, looking for that push north on a longer term basis. Now, if this was to break down, right, this is your next area of demand on the 60-minute time frame right here. Right? This is your area of demand on the daily time frame, right, which is right around here at 53.40 area. So if this doesn't work out for us, what I'll be doing is just selling the in the money call option, right? Selling theta and delta, right? To then take those premiums and accumulate more here without paying for it. So we're not going to take the loss, right? And we can put more money into it at a lower price point in an area of unfilled institutional buy orders here, and then look for the longer term play to the upside, right? So this is a long-term play. This is heavily accumulated institutions. So not too much to report there, not much happening there. The other one we looked at yesterday, again, a longer term play on accumulation, FOCS into our demand area here yesterday, hit that. We got the low of the market in here, and this morning looking real good this morning here on the 60-minute time frame. So big move up, sell off, gap fill into the little demand. Okay, we hit this area there yesterday, base, breakout. So when the market was retracing yesterday, it just based. So that shows you a relative strength to the indexes. Trade above the high here, trade above the high. So now we got higher highs, we got higher lows. Now we get the impulse move to the upside. We should get a corrective move, shorter move to the downside, right? And then the continuation of this on the longer term. So let's just jump out to a daily on this. Right, so there's a nice big deep retracement, weekly and daily demand area. So now we're looking for at least to get back to 40 at a minimum, right? But probably much higher over the longer term. Right, so we're through this base here on the daily, which is phenomenal. Right through the base right there on the daily. So showing strength. Okay, now we're into this area of 13 and 20 period moving averages. Get above those if we can, and we're gonna be looking solid. Right, so under this pivot low here, if you're looking to take profit, that would be an area to take some profit. On a swing trade basis, looking at this on longer term, an accumulation basis, right now on the daily time frame, we are in a downtrend. Looking to break out to the uptrend. On the weekly basis, we are still maintaining the uptrend, right? Higher highs, higher lows, retracement on the weekly basis. We just got above the last week's candle's high. That is an indication of strength. We are coming into that 20-week moving average here, which is going to give us a little bit of trouble. So we want to see a close above that this week. Ideally, a close above the 13-period moving average, which would be a great indication of strength. There's going to be a little supply here that we picked up on the daily time frame there just a minute ago. Let's take a look at what do we got? Some of the big techs. Amazon, we'll kind of fly through these. So on Amazon right here, beautiful retracement on the weekly time frame. Showing a lot of strength here. So we did have a lower weekly low. Right now, what we want to do is look for a close above this week of the halfway mark of this candle. That would be an indication of strength. Looking at this on the daily time frame. Gap up, right? So close right near the high of the daily candle. Gap up is an indication of strength. Right, so now we're looking to fill this gap at a minimum and get back into these moving averages. So for Amazon, it shouldn't be difficult at all to get up into this region here. previous support, right? Support, coming into that 13 period moving average there on the daily time frame. So it shouldn't be hard at all for Amazon to get up to the 31.11 area, right? We're currently at 30.41, so there's room for Amazon to move to the upside. A lot of room there. Let's just break this down. Let's go to the 60-minute time frame. On the 60, right, complete pivot, right? So close at the high of the candle, above the previous candle's high. There's a complete pivot, gap up. Let's go and fill that gap. Let's go fill that gap. So the gap fill is at 3,070, and that's previous support and resistance from back in here. So that'd be a very, very simple and an easy task to achieve. If you're long Amazon already, then this is an area you want to take some profit. Right? 3070 is a target area you want to take some profit and lock that in. So there's a quick brief on Amazon. Let's look at Apple. Okay, like I've been saying, I want Apple down here at 96.40. Right? That 96, even looking at 99 price area here with the 20-week moving average would be absolutely awesome. So Apple hasn't achieved that for us yet. Right? We had the gap down on the weekly time frame. Big, strong, solid move to the upside on the daily chart right here. It closed right near the high of the day, gap up, gap fill, and moving up. So we got the 50-day moving average coming through here. Close about that 50-day moving average would be a great indication today. That would be look awesome and phenomenal. And then that continuation of the up move. So we're going to have the area right here. So I would just take this a little lower for target 1 on that. Target 2 coming through 120, and then looking up here at 130. So great opportunity there on Apple. Looking for, let's come down a small time frame. On the 15, down, gap fill. Right? If we base here, you can look for a break above the high of that candle there and look to get long Apple. And we can trade all the way through. So you got to be careful of this support area right through here, 113.70 as a day trade. There's target 1, target 2 at 115.26. So that'd be a nice little day trade if we can get some momentum and carry follow through on this market to the upside here throughout the afternoon. So there's a nice little day trade for you opportunity on Apple. So you could trade the stock there. You could also trade the options on that. Use a weekly contract, go deep in the money to get a high delta, which is equivalent to trading the stock at a very low cost and decreasing risk. Right? All right, Dale Sugar Trader Boys. Let me just take a quick brief so you can check this out. You guys want to follow this? You guys want to get involved in this? You guys want to do this? And let me take you in. If you guys haven't seen this yet, this is something you guys got to see. Let's go over, and I want to share this page right here with you. We come in here and we go thetraderboys.com. Thetraderboys.com. If you guys want access 5 days a week, all throughout the day, come in to thetraderboys.com. You're going to come over here where it says plans and pricing. Plans and pricing. I'm going to have a little bit of lag because my computer's overloaded with all the screens up and markets up. And right, but plans and pricing right here. Hey, you guys want to check this out? And you're going to see the option right here is you can come in and enroll here. It's $69 a month. Enroll right here, and you're going to have access to all the trades we're going to be putting out there between myself and Jamie in these markets. As opportunities arise, we're going to be coming in little videos and little screenshots. And you want to trade with the community. Right? Come in, trade with the community, help each other out. It's amazing how much you can learn from others and so on through this process. So right now the room is open. Right? It's open, so anybody can come in. So if you want to have access to this, just reach out to me. You can do it on Facebook. You can do it on Instagram. You can go comment on YouTube. If you're not subscribed on YouTube yet, make that happen. Right? Get onto youtube.com, The Trader Boys, subscribe, hit the little bell so you get notifications when we're going live. And when I'm posting videos in there, I'm posting trades in there, you're going to have access to that. Right? So don't miss this opportunity. $69 a month, or you can come in $690 for the year, $700 for the year. This is a phenomenal offer. Dale Sarger, Trader Boys. Don't wait, make that happen. We'll see you bright and early tomorrow.